What if I told you that a 42-page business plan written entirely by ChatGPT got rejected by a bank? Not because it was too short, not because the business was not profitable, but because the plan did not speak the language that SBA lenders actually need to hear. In this video, we are breaking down exactly what went wrong and what it takes to get an SBA loan approved. Meet Marcus. He came to us after his SBA 7A loan application for $650,000 was denied. Marcus had been running a profitable operation for 3 years. His numbers were solid. But he had used ChatGPT to write a 42-page business plan, and the bank sent it back with 2 words: not sufficient. Here's the thing. What ChatGPT produced was not bad on the surface. The plan was well organized, professionally written, and covered all the standard sections: executive summary, market overview, financial projections. On paper, it looked like a real business plan. So what was the problem? The bank flagged 4 specific issues with Marcus's plan: unsupported revenue assumptions, a flawed debt service coverage ratio model, generic market analysis that did not reflect the actual local market, and a management section that could have been written for any business in any industry. Let us go through each one. Objection number 1. Unsupported revenue assumptions. SBA lenders do not just want to see numbers, they want to know where those numbers came from. What is your current revenue trend? Do you have contracts or letters of intent in place? What is your customer acquisition strategy? ChatGPT generated projections that looked reasonable, but they were not tied to anything real. The bank's note said it plainly: revenue projections must be supported by historical data or signed agreements. Objection number 2. The debt service coverage ratio. The SBA requires a DSCR of at least 1.25. That means for every dollar of debt payment, the business needs to generate $1.25 in net operating income. ChatGPT modeled the loan payments correctly, but it did not account for the business owner's existing personal debt obligations, which the lender factors in. The resulting DSCR came out below the required threshold, and the plan did not address it. Objection number 3. Market analysis. ChatGPT gave Marcus a macro-level market analysis: national industry trends, total addressable market size, broad demographic data. What the bank actually needed was a micro-level analysis. Who are the specific competitors within 5 miles? What is the local demand? What is the real capture rate for a business like this in this zip code? The plan described the national staffing industry. The bank wanted to know about Marcus's specific market. Objection number 4. The management section. This is where AI-generated plans fall flattest. ChatGPT produced a generic management section that listed roles and responsibilities, but said nothing specific about Marcus. His background in operations management, his industry certifications, his existing client relationships, the fact that he had grown revenue 40% year over year. The bank needs to know why this owner specifically can execute this plan. A generic org chart does not answer that question. Here is the core problem. AI is excellent at producing content that looks like a business plan. It knows the structure, the language, the sections. But what banks are actually evaluating is risk. They want lender-specific financial models, hyper-local market data, an owner narrative tied to real accomplishments, and knowledge of what that specific lender cares about most. ChatGPT cannot know any of that. So what did Marcus do? He came to OGS Capital. We rebuilt his plan from scratch, not from a template, but from his actual financials, his market, and his story. 6 weeks after his rejection, Marcus was approved for the same $650,000 loan with the same lender. Same business, different plan. There are 4 things that require real experience, things that no AI prompt can replace. First, lender-specific financial modeling that accounts for how that particular bank underwrites SBA loans. Second, local market research that reflects actual conditions on the ground. Third, an owner narrative that connects the borrower's history to the loan's purpose. And fourth, lender preference knowledge, knowing what a specific institution prioritizes in its credit decisions. When it comes to getting your SBA business plan done, you have three options. You can do it yourself, high effort, high risk of rejection if you do not know what lenders want. You can use AI, faster, but as we have seen, it often misses the mark on the details that matter most. Or you can work with an experienced SBA consultant who knows exactly what lenders need and builds your plan accordingly. That is the option we recommend. If your SBA loan is on the line, do not leave it to a generic AI tool. Subscribe for more insights on SBA lending. Drop your questions in the comments. We answer every one. And if you are ready to get your plan done right, visit the link in the description for a free consultation with our team.